Welcome back to Golden Rule Radio, a weekly summation of the precious metals markets, where we focus each week on what's happening in those markets as well as those related to the metals and news that moves the precious metals prices. We'll try to give you an indication of what's on the horizon, but a little recap of the previous week as well. Before we get too far along, though, we want to point out to you that we had a recent interview with Don McAlvany, the founder and chairman of this company, and it's very, very timely and powerful. We're going to provide the link below to that interview, as well as a link to the June McAlvany Intelligence Advisor, which is a newsletter that Don's been writing for 41 years. Again, couldn't urge you strongly enough to go listen and go read.
You can find the links in the description below.
Listener questions this week. We do want to address Gone Bamboo, who asked, please let us know of new legislation concerning gold and silver. I heard some things were changing. Thanks as always.
Yeah, we regularly hear rumblings about gold and silver legislation, and certainly there's been some discussion on the state level about gold and silver legislation regarding taxation as well as the usage of gold and silver as money. So we are always keeping an eye on that. We're also very tied in with ICTA, the Industry Council on Tangible Assets out in Washington. So certainly if we hear anything, you'll know it as soon as we do.
So getting specifically to the precious metals, we're going to recap gold, silver, platinum, palladium prices. You know, we were talking before the show about how quiet it appears, and yet gold is still up 8.8% on the year. We're sitting at 1,252. Silver, again, seems quiet, up 7.2% from the first of the year. And the one that's lagging the most, I'd say, is probably platinum. It's only up 4.5%. Palladium being the big man on campus at 12.1% on the year, which has really stressed that platinum palladium ratio.
Gold is in a nice channel, and we're currently at and around an inflection point that has been the inflection point around 1250, 1260 as it comes up and runs into there. Last time it broke through it and ran almost all the way up to 1300, pulled back to around 1220, and we're right back in that range at 1250 for gold. It has been forming higher highs and higher lows. Silver has not, as Miles was pointing out. You want to say anything else on silver, Miles?
Robert and I were looking at some charts before recording this morning. We've had silver run into the mid to high $18 range, 1, 2, 3, coming up on possibly a fourth time here. Silver is just a more volatile metal. You know, gold's channel moving up is very stair-step. The lows are lower in silver, the highs are higher. So it doesn't surprise me at all that as the metals came down, silver came down a little bit more. As they're stepping back up, we should see a slightly better percentage increase in silver than gold.
Silver is showing the volatility that we like, especially when the metals are rising. We like to be in silver.
One thing we do talk to a lot of our clients about is using gold as a savings account, but you can occasionally use silver as an investment account. And we've talked about ratio trading in the past. So there are some great opportunities in that volatility. If you want to chat about that with one of us, give us a call.
On that note, we had a good listener question last week from Scott Dickert asking about silver's industrial commodity aspect rather than exclusively a store of value like gold. That's accurate. Silver, you know, undergoes a lot more pressures when it comes to deflation and inflation. That's a whole unique show in itself. So Scott, we appreciate your question, but you're real close to understanding the fact that you do need an economic turnaround for silver to take off and really run.
We'll try to address that question in more detail in a future show.
So what about other markets, guys? I mean, the Dow, we're again seeing, as you mentioned last week, the resistance at the top here.
Dow resistance is declining. We seem to continue to miss out on making a higher high in the Dow. I think we've plateaued for a while here. It could go up, could go down, but I don't think it's going to make either decision here for at least another couple weeks or months. I think that as people are becoming more skeptical about the future of the economy under the Trump administration, it's going to become harder and harder for the Dow to continue to make new highs.
It may take another few months for the top in the market, but there is so much risk there. I mean, sell in May and go away just keeps rolling around in my head. And at any point, I think the market could roll over.
From a technical standpoint, the last couple weeks we've been talking about these gaps in the Dow. The second one filled perfectly over the last week. We still have 2 to go, one a little bit under 20,401, right at that 2 and a lot of zeros number, the 20K number, which also lines up with the fib level. That's about 4 or 5% down from where we are. And I think pushing down about 4 or 5% makes a lot of sense right now. we may not be seeing, the big Dow drop that we saw back in 2008 again, but I think even just a marginal correction is expected at this point.
Hence the need for diversification in your portfolio. Our focus is on physical metals that get you out of paper altogether, but we don't say you have to steer clear of any one market. You just need to diversify, and the dollar is showing you good reasons why. It's just come into our support channel. Guys, is it going to continue down?
I think we probably have mostly American listeners. Would you say that?
Yeah.
I would assume that most of our listeners are Americans. And did you know that your dollar has lost over 5% just this year? Go look at the dollar index. It is doing exactly like what we talked about, coming down into the 96.5 level. And it doesn't look very strong, does it? It looks pretty weak.
No, it's been doing what you talked about, because I called 104 a few months ago.
Okay, that being said, what do you move into then in the instance that your currency, in which everything is denominated in the daily life, what do you move into? Obviously physical metals, but we're also seeing a big push into Bitcoin recently here. Why is that happening?
I think people own Bitcoins for exactly the same reasons they own gold.
Yeah, I think people come into the Bitcoin markets and the cryptocurrency markets for almost identical reasons. You've got a population of those investors who are seeing the price rise, and they want to get involved with those potential gains, because there are some kids out there who bought Bitcoins at $2 or $3 or $4 a piece back in 2012 that are now in their mid-20s and have a few $1 million in the bank and have no idea what to do with it. And then you've got that second group of people that come into Bitcoin for the same reason a lot of people get into precious metals, and that's the privacy.
Well, and not only that, but you also have more of a perceived store of value, right? So if a currency, a fiat currency, every currency in the world is a fiat currency, to me it represents a general distrust in the fiat currency, regardless of where you live.
Even though I'm a tangible asset person, the big reason I've been pro-Bitcoin for a number of years is how it's been developed and built. And we can certainly get into the comparing and contrasting gold and Bitcoin later down the road. But the one thing we did want to focus on was the concept of privacy.
Is owning Bitcoin truly private?
I think once you own Bitcoin, it is private, Robert, but acquiring that first Bitcoin has some hurdles. From a privacy standpoint, you do have to show identification or upload a picture of your ID for anything over $150 from a transaction standpoint. And, we can have a $150 or a $1,150,000 transaction in the physical precious metals, and we have never required that.
Yeah, we're not required to report anything when people buy from us.
Now, that being said, I do believe that Bitcoin is serving as a barometer. I think it's a very like-minded group to those that are pursuing the physical tangible metals, as Miles alluded to, group number 2, not the group necessarily that's pursuing performance. That's not our core clientele. Our core clientele is those looking for long-term asset preservation that makes them immune to the fluctuations of a fiat currency, like what Robert just said has occurred so far in 2017 with the U.S. dollar.
Well, not just the fluctuations, but the direct involvement of the government and now the banking system into our cash accounts, into our personal accounts. I mean, look at what happened in Cyprus a couple years ago. Thanks to that, there's now world legislation that says, your bank's going out of business. The government doesn't have to bail them out anymore. They can just take a few % of everybody's account. That's insane to me. They can just take your money.
Well, and that goes back to the removal of the Glass-Steagall Act, right, where you now have brokerage firms that are banks. So don't forget that your investment monies are considered in a bank, and those too are subject to bail-in exposure.
It's no surprise to me that in a modern digital world, people are looking for something that still provides the liquidity of using a debit card or Apple Pay, or in this case, Bitcoin. But they also want the safe haven and the privacy of being able to transact their business however they darn well please. Tori mentioned at the beginning of the show a recent interview that we did with Don McAlvany and a newsletter on the same topic. This is primarily what Don went into being a permanent resident over in Asia, in Indonesia, and what he's seeing in China and what he saw in India a few months ago when the Indian government came in and took all of that currency off of the streets and forced people into a bank-run digital system.
Don's great. I love that guy. His newsletter this month starts, the very first sentence says, "The world is entering the most dangerous period in over 70 years. Go read it."
And another quote, Robert, from the newsletter. This is actually a David Stockman quote, former Reagan budget director. Back on April 18th of this year, he said, "Get out of the stock market, Get out of the casino before it's too late. Get out of the bond market and buy some gold. Why buy gold, Miles?
Because we know a cashless system is coming. We do not know what that looks like yet, whether it's cryptocurrencies, whether it's bank run, whether it's state run. We don't know, but we know it's coming. So the only guaranteed protection for that until we know what it's actually going to look like is owning your own tangible assets.
So before we wrap up, speaking about Don and David McAlvany are actually going to be on tour this summer and fall. They're going to hit at least 12 cities. So stay tuned. We'll keep you posted. In terms of a specific recommendation, we mentioned briefly last week to call us. We have a retirement planning worksheet that we'd be happy to get to you, and it'll give you the opportunity to do the exercise for how many ounces you should own by the time you retire that will help carry you through, at least in part in your retirement, because gold and silver will be guaranteed income down the road. And give us a call. We also have specific product recommendations in that worksheet that we can describe to you. If you haven't already, please click the subscribe button below to subscribe to us. And you can also follow us on Twitter at ICA Gold.
On behalf of Tori and Robert, this is Miles saying thanks for listening and have a good week.